Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Here we are with another episode of Black and White Market Minute on Life Planning 101. Matt Ervin and Aaron Kennedy with you today. Talk a little bit about what's going on in the market. So we were talking earlier about I listen to a program every morning, and they were saying how important it is to watch the bond market as an equity investor, because the bond market, there's less margin for error. They're much more sensitive to changes in the data. And they said it's blinking, it's flashing. I find that kind of interesting. That's what we say quite a bit. So to hear people start talking about it on the news, almost like, do we need to think different? So tell me, what's going on with the bond market and banks too? I know are a huge topic.
Yeah, all of it is so interconnected, and interest rates are moving a lot. You know, we just saw this week 1 month treasuries pop up to 5.3%.
Wow.
You know, there shouldn't be this much uncertainty in what is going on. You know, and people are just parking their money in short stuff that is somewhat reliable.
Right.
You know, and that's going to be in the treasuries and CDs. And people are trying to find a way to hide from the debt ceiling that's coming out. There's just so much news, and it's all trickling through to the number one place that shows the risk, and that is in the bond market.
Right. Yep. That's super interesting to think about. I know they're still fighting over the debt ceiling.
Yes.
And they've been saying for months, let's just get it approved, let's get it approved. Well, what I understand, there's a lot of staffers trying to work while the Congress people are out, so trying to get it approved. So it doesn't sound very productive to me.
Yeah, probably not. I think this goes on every single year. I don't even know why it makes the news anymore. You know, if we default on our debt, everything's
right
gone.
Yes.
And I'm not talking about a technical default. You know,
right?
That doesn't matter.
A couple of days isn't going to move the needle, but no. A true default.
A true default, and it's over. The U.S. dollar's over. There won't be any place to hide, and no politician's going to let that happen.
Not while they're trying to rerun for office.
No.
So, dude, well, you brought up, you know, obviously we know the interest rates are too tied so tightly with real estate. What were you saying earlier about real estate?
There's a lot of fear in the market for these banks that are holding real estate loans. I think even Charlie Munger was talking about it at the Berkshire meeting. Charlie Munger is Warren Buffett's partner. And, you know, if you're looking at real estate, the higher interest rates go, the more expensive the payment to buy the real estate becomes. Yeah. And most real estate is levered. You know, there's not a lot of cash purchases at the institutional sized real estate. Nobody's carrying around a checkbook that can go for $1 billion.
No kidding. Just walking around money.
So it's all levered. And the price of real estate has to come down with where interest rates are. And what happens to the loans covering those portfolios. So it is a big fear. And again, this is being caused by the Fed.
Yeah.
They're raising interest rates. You know, just looking at the banks, it's not so much just the portfolio of what they're holding on their long bonds versus their short, or what they're paying out in their CDs. There's actually assets that they're holding that people are starting to question. And that's in the commercial markets.
Yeah.
So it's going to be really interesting. I was talking to somebody Monday, our buddy Ryan from Hines, and then he was showing the real estate and the deals that are coming through and the pricing on those deals. And it's slowing down across the world. Europe has come down. Now Europe's prices are coming down with the decrease in number of sales.
Okay.
But the U.S. is completely opposite.
Right.
You know, inventory's going down, but prices are going up. or the amount of sales are going down. So that's not really.
We're a little bit skewed.
Yes, yeah. That's got to change. But once all this happens, this is one of those things that the writing's on the wall. Everybody knows it's going to happen.
Mm-hmm.
So will it really happen?
Right. That's right.
Going back to that, this one real estate portfolio is a $3 billion portfolio,
Mm-hmm.
and they're sitting on $1 billion in cash.
Wow.
What are they waiting for?
Yeah. You gotta have a good buying price, and that's hard because some of those programs, by prospectus, have to deploy capital, so they're towing that line as well.
They're towing the line, and they're waiting, and they're being prudent. Yeah. Now, if everybody says this is exactly what's going to happen,
right?
Will it really?
Does it actually happen?
And it could be kind of like what's going in the market right now. If people are just buying every dip, expecting that this is it, it's going to be difficult. But if you look at the big boys, if you look at the banks, if you look at the big real estate, they're all conserving.
Right.
If you go look at banks, what was the report that just came out Monday?
I don't remember what it's called. It's about the lending, though.
Yeah, it's lending, and banks are tightening up. Their credit standards are going up. Right. They're not issuing as many loans. They're tightening their belt. So if the banks are doing that and the real estate companies, where's the money?
Right.
It's contracting.
Right.
The economy is contracting. So...
Yep, money supply. Had a client ask me, he said, well, how is this banking deal affecting me? Well, I mean, it's all tied together, but what we understand is a lot of the banks that have had so much trouble were basically lenders to the big tech companies, right? Because that was one of the places that got hit the hardest. But you just nailed it, the consumer debt too, because auto loans is one of the places they stated they're going to tighten up the quickest. The days of going in there and saying, I want whatever car is on the lot and find a way to make the note work at $200 a month, even if it's a 12-year car payment, whatever the terms, right? But they're not going to do that. That loan's going to be way too risky.
Yeah, it's drying up. Where do we go from here? Right. There's one big dislocation, and it's the stock market.
Right.
Everything else is slowing down, and the tech part of the market is going through the roof. That's not. Everything else is wait and see. Conserve.
Humans, we're just we are so arrogant to think that it can't happen to us.
Yes.
But we went through COVID and the world shut down and there was a bailout. And then right after that, the market did very, very well until it didn't, right? That's what we're facing, the repercussions off that. But instead of reflecting on the fact that we have major repercussions now, we're saying, oh, if it gets bad again, we'll get another bailout.
Yeah.
So
what kind of thinking is that?
It's backwards.
It's backwards. And you know what? It will always work until it doesn't. And then it's over.
That's right.
The game is over.
That's right. Yeah. So, for the sake of positivity, Aaron, let's turn it around for the last few minutes of our show here. And how are yields? Are we taking advantage of them?
Yeah, short yields are great. Short CDs are doing extremely well. I think we can get over 5% on 18 months. Mm-hmm. So, almost across the board, we can get a little bit greater than 5% on the CDs or treasuries, depending on the maturity. That's fantastic. There's a lot of dislocation in the market right now. Other than the tech industry, things are getting cheap, and it's starting to look. Some of the stuff is enticing, especially these regional banks. Right. They're beat up, and maybe not the ones with the real problems, but. There's still a lot of great banks out there that are in perfectly good shape, that have done the right thing with their assets and their depositors. So, it's starting to. Yeah. There's some good opportunities out there.
The good guy doesn't finish last in this case. Yes. All right. Well, thank you guys so much for joining us today. As always, we encourage questions. If you have topics you want to hear about, we like staring at each other talking into the mic, so just give us something to talk about. It shouldn't be a problem. Appreciate each and every one of you so very much. Want to take care of you through this. Nothing else, Aaron?
No, that's
Okay.
it. Everybody have a great weekend.
Yeah.
And we'll see you soon.
Yep, this is Matt Ervin and Aaron Kennedy signing off for Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.